Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the February 18th, the terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hope you had a great weekend. Great to be back with you on Taco Tuesday. Of course, I want you to know I'm absolutely grateful for your presence here. But more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. You can dial on in at 877-927-6648. If you can't dial in, well, we've got you covered there. But do this early. Send me an email at steve@tfnn.com. Inside the subject heading, please put radio show question. Of course, in our Tigers Den, well, any ping will do. So let's go ahead and get this show started on Terrific Tuesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we've got nearly all of the indices trading in the red. It's the transports that are up about 9 points. That's basically flat. The Dow's up 188. S&P down about 13. NASDAQ off 9. Russell 7. Semis are up 26. New York Stock Exchange down 0.5%, 69 points. Wilshire is off 106. Leading the charge dollar-wise, the upside, you've got Tesla up 47 bucks and change. Amazon 19. AutoZone up 19. Boston Beer up 14. Shopify 11. Restoration Hardware up 11 and change. To the downside, it's Booking Holdings off 16. That's less than 1% to the downside. Lam Research off 13. That's not 1%. That is 3.7% to the downside. Vulcan Materials up nearly $9 or about 6%. So there's plenty to look at. But we're going to begin by taking a look at Tesla. That was the first request. We do have call ahead seating. So let's go take a look at, not Tesla, I believe it was Lyft. So the question on Lyft is, do we see a bottom out here, or where might there be a bottom? Now, we can only take a look at our daily and our weekly profiles out here. Not enough data to generate a monthly profile. And we take a look at our daily prices below the bottom of its daily profile. No bullish candle or anything like that at this stage of the game. And we take a look at the weekly. It's trading with inside its profiles, with the bottom of the current box being 43.46. Okay, so we've got that. Let's go take a look at Stevie's other sets of tools, charts out here. See if Lyft is, okay, so has identified some kind of bottom. So I don't have that yet here with regard to those tools that I use to identify a bottom signal. However, what we can see is that price appears to be pulling back to test its breakout level. That breakout level, 43.03 out there. So on the daily time frame, I don't have a bottom signal. Watch for price to potentially get down to that 43.03 area. Below 43.03, we'd look at 41.73. The last time that this we saw a bottom out here was a TD9 count bottom that had formed. I've got wave number 7 up at the top, and so I don't have any signal out here on the daily time frame. The weekly time frame, not enough data with regard to this set of tools for us to really do anything other than there was a Rhodes Momentum indicator bottom back here in October of 2019 out there. So it's really only be about the daily chart. So I hope that helps you out. I see the potential bottom or support with price being below that daily profile at 43.03. And that is for ticker symbol LYFT. Lyft. Now let's go take a look at the markets out here. How are we going to begin this? What's the best way to begin this? Let's begin by taking a look at the NASDAQ out here. Well, let's begin by taking a look at market breadth. That's a great place to thank you. Somebody out there was saying market breadth, and somehow I got that mental telepathy thing out here. So let's start by taking a look at the New York Stock Exchange. What do we know about the New York Stock Exchange? Well, right now, you've got the advanced decline oscillator is below zero. If we see a continued close below, if it closes below zero today, and closes below zero tomorrow, then we really have as well, sellers would be in control of the market out here. Whereas if today is just a one knee-jerk reaction, and that's a possibility, folks. We maybe just be looking at a knee-jerk reaction out here, and the advanced decline oscillator finishes back above zero. So today would be below zero close. Tomorrow, back above zero. Well, then we're looking at it really was buyers that were in control all along. That's how we would use, that's how I would suggest you use that advanced decline oscillator tool. So that's the market breadth there. And this is on a daily basis. Let's take a look at market breadth for the NASDAQ 100 and the S&P 500. Get a feel for where we're at here. So here's the NASDAQ. Let's begin here. And inside the NASDAQ, you can see the dials. And I'm looking in the upper right-hand corner. In the upper right-hand corner, we have 4 different time frames that you and I can use to identify whether it's market breadth bullish or market breadth bearish, directionally speaking. You can see market breadth, or maybe you can't see, maybe it's too small to see, but if you do look at the very right-hand dial, in fact, I'll just simply expand it. It'll make it easier for you to actually see. So let's forget about the dials. Let's just come take a look at the chart out here. And what we can see is that we have been in market breadth bearish crossover mode since about 5 a.m. this morning, and we're still there. What that means is that on a 60-minute time frame, there are 30 constituents trading above the top of the profile for a 30-minute basis, and there's 39 trading below that. And so what that says to both you and I, now this is going to be a 60-minute time frame chart, by the way. This is going to be a little bit of a lagging indicator. I've gone back and tried to track, hey, if you just traded crossovers, does that give you some type of advantage? The advantage that it gives you is understanding the makeup of the market. What's going to identify tops and bottoms, not all of them, but most of them, or when they appear, they're helping us to identify a top or bottom, are going to be the TD9 count, Rhodes momentum indicator signal, which have been wave number 7. So this is not going to give us the overall picture for the NASDAQ, but it is market breadth bearish as we speak. Now, what Stevie does is I go from the 60-minute time frame chart, not chart here, well, it's data, to an actual 60-minute chart of the NQ to see what's going on there. So now let's pull up the 60-minute chart here for the NQ and see what we can see. Well, here's what we can see. The NQ on an hourly basis, top with the TD9 count. Let me just get my cursor out here. You'll be able to see it. So that's right here. This is at 2 o'clock in the morning. This, by the way, is on the 17th. This is yesterday. And when the hourly chart bottoms, it bottoms with a TD9 count. That took place at 3 o'clock this morning out here within that hour. Now what we're seeing is price has penetrated the breakdown level. Now, in this case here, because that TD9 count, it happens to be at the top of the gap to the downside. I know that could be really confusing. But basically, when the futures markets opened last evening, what we can see here is that price had gapped down. And so that high of that gap to the downside is resistance. Now, this is an hourly time frame chart, and I won't know what the candle looks like until 2 o'clock. I'm just here to let you know, 96.23, price is just slightly above it. It's fighting resistance, big time. But it closed above that at 2 o'clock. Well, and if market breadth switches to bullish, that would be very bullish. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So let's go back out to that hourly chart inside the NQ out here, because we really want to be completely focused on the NASDAQ, in my opinion, because that's led the markets higher. If the markets are going to crack to the downside, theory would suggest that it would lead it lower out here. Now, we can see at this 96.23, whether it was just simply last night's gap to the downside or it was a TD9 breakdown level, doesn't matter because they're two significant areas of resistance. We can also see that the first time up here, which was this wide-ranging bar, by the way, at 10 o'clock this morning, hourly chart, and then we take a look at, so between 9 and 10, but then we take a look at the next bar out here and really the bar after that, and that set up your Three River Evening Star right at resistance out here. So price is taking out resistance. We can also see the new profiles formed since that prior one, and 96.28 is also resistance. So we know that the NQ is in this resistance zone. So if there's a close coming into 2 o'clock, because we're off the air at about 3 or 4 minutes to 2 p.m., if there's a close above 96.28, it's a indication that the NQ wants to at least run to test the bottom of the gap. Now, the bottom of the gap would be the low from the bar yesterday when the futures shut down. And that low is, let's see if I can grab it here. I didn't mean to do that. Hold on a second here. Sorry about that, folks. 96.62. Okay, so that's the hourly time frame for the NQ. Now let's switch over to the daily time frame. Going to be a different message out here. If we go from hourly to daily, what we're going to see, it's in market breadth bullish. So the bigger picture, well, daily and weekly, by the way, our market breadth bullish out here. 54 constituents are traded above the top of their profiles, only 13 below the bottom of their profiles. But what's actually happening on the daily time frame chart for the NQ? Excellent question. Let's go answer that question. So we've got a valid topping signal as we speak right now. Now, as we speak right now, we have that signal for two reasons. One, today's bar thus far is a key reversal inside of the NASDAQ. A key reversal requires the market to be in extended condition. Well, if you've got a Rhodes momentum indicator signal out here, I guarantee you the market is in extended condition. You can do it a number of different ways, but that's one of them, most certainly. Second, for a key reversal, the high and low of the prior bar has to be exceeded. I guess, can you exceed the low? But you know what I'm referring to out there, out here. And that has occurred thus far. And you need to see price close one tick below the open out here. So it's got to be a red-bodied candle, so to speak. So it has to close, and price has to move in the direction opposite of the trend. That would generate your key reversal session. But would you and I right now, knowing that there's a key reversal and even there's a bearish engulfing candle because of the small-bodied candle previously, would we say that this is a top? Would we? Really? Would we? Would you? Would we? No, we wouldn't. Why wouldn't we? For one of the most important reasons that there is. All price has done so far is tested Stevie's green line, 9,600 and change out there. And why is that important? Well, what's really important about that green line is that tells us, the mere fact that it's green tells us the price oscillator, the difference between the 39 and 19-day exponential moving average is above zero. It's really kind of like Basil's MACD tool, only he's using the actual parameters that were established by the brothers when they created that tool out there, which are 12 and 26. So we're using 19 and 39 for other reasons out here. But when price just pulls back, as it has, it was below that, but it's a daily chart, so it's truly the end of day. There is no, you could go with a neutral signal, I suppose, but you couldn't go with all-out bearish out here because price must at least bust through one level of support. And that hasn't happened inside the NQ. Now, if we just simply switch over and take a look at the weekly time frame, let's do this here because it's really important for us to take a look at this. Let's take a look at weekly. So let's punch up the weekly. Do we have the weekly? Did this? Yeah, this just changed the weekly. Very bullish. You've got 67 issues where prices trade above the top of the profiles and 13 where prices trade below the bottom. Don't let anybody feed you a bunch of garbage out there that there's no participation in the market out here. You're looking at participation right in front of you. What the heck? And I almost slipped up there. What the heck are those folks so bought into that there's no market participation? Doesn't make any sense. Now, this is the ESPN ad group. I meant to grab the NQ out here since that's what we're really talking about. So let me pull this over. And we're just looking to see what kind of patterns are out here on the weekly time frame. If there's going to be a top, the high would come in this week because of a TD 9-count pattern. But we can also see now prices beginning to move higher due to less relative energy. So we've got a Rhodes momentum indicator signal that's present. That will only be a problem if we see a bearish reversal candle. And then really there's only a problem if there's a close below Stevie's green line. That's 92.68. So overall, as we speak right now, intraday, we've got some signals to pay attention to. They will help you. They will help us understand what the intent of the market is. The NQ's made it back up to that resistance level. We're just using that hourly time frame chart, 96.28. But anything above 96.28 would suggest being long, not short, even intraday out there. Hey, let's go to our first caller. I see we've got Ron in Denver. Ron, thanks for calling. Thanks for holding. How are you today?
Great, Steve. Appreciate you taking the call.
Sure.
I wanted to ask you about this company here in Denver. They went public a while back, or recently, PING. It's a security stock, and there's a big cyber conference that's coming up in not in Denver, but starting February 25th, and they call it a Zero Trust Cybersecurity Conference, and for internal security credentials, and that's what these guys are involved with. And they're supposed to be, they're profitable last quarter, they're supposed to be profitable this next quarter. Take a business away from IBM and Oracle in that. And I just wondered, the symbol was PING, excuse me.
Yeah. Yep, I got it. Like the.
And I just wondered, I was thinking of, to be honest, doing a March 20th, 25-30 spread for $2. And I just wondered, does that sound reasonable?
Well, let me tell you what. So Ping is an IPO that's just coming back, as you pointed out. But this comes back in October of last year. So unfortunately, Ron, we can only go with the daily chart, I believe, for the most part. Yeah, there's not enough data. There's really not enough data for us to take a look at a weekly time frame to figure out what Ping is doing. So on the daily time frame here, I think the most important pattern, I won't bring over my other charts because they don't show anything specific just yet. For us, what we see here inside of Ping Identity Holdings is prices trading in between support and resistance. Friday was a test of resistance. It failed to, even though intra-session, it was over 26.41. By the end of the close, it was back below it. That level was tested, Ron, on February 5th, tested and rejected. Today, so far, tested and rejected. Now, I don't know if this is, just it's rejecting it. It's a higher bottom today than it was on Friday, but there's nothing clear here for me that tells me that this is going to break out of this resistance level. If it does, then it goes back to its highs out here, those highs from which would be 28.01, but it hasn't given us that signal as of yet. That signal, by the way, on a daily basis had 671,000 shares, and on Friday it was moving up with less volume. That was a test and rejection of a pretty important swing point out there. So this I just see in a consolidation. Oh, we'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we Tigers and Tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's off 193, S&P 13. We're going back to Ron. Sorry about that. I was not paying attention to the clock and was just almost ran through that segment. So nothing here changed during that break, and I just see a consolidation right now between 24.40 and 26.41. Would that help you in setting up any trade or bypassing a trade at this stage? Oh, maybe we don't have Ron anymore. I guess not. Okay. Well, Ron, you've got the information or the best information I can provide for you. And if you need anything else, just get back in touch with me. No other calls, no other requests, email-wise or anything like that, at least not as of yet. So let's keep taking a look at the markets out here, see what else it is that we can find. I know what we can find. I don't know, Jay is in the audience today, but whether he is or he isn't, everybody's interested in those new market profiles. And we do have new market profiles or new profiles that are attempting to form. And I say attempting to form because I'm using Stevie's advanced Doppler tool out here. I would think we'll know by tomorrow morning, maybe this evening, if these have taken hold out here. And so the new profiles inside the ES Mini, the bottom of the box, it actually has changed. Earlier this morning, it was a bearish structured profile. Now it's switched to a bullish structured profile. Very interesting. Again, they're in the process of forming. But here's what we do know at least. We know that the sellers reside at 33.9250. That is the top of the box. We know that buyers reside at the bottom of the box. That would be 33.39. Now, here's the deal. You'd need to see a close below the bottom of a profile in order to generate some type of change in trend signal. So we don't have that inside the ES Mini. We don't have it inside the NQ. Now, the NQ is a bearish structured profile at the moment. Resistance being now 96.51, support 93.66, 95.80 is the center. We're trading at, where is it trading? 96.26. As we speak. Is that where it's trading? 96? Yeah, 96.26 out here. So, it's in between the center and the top of that box. 96.51 is going to be important to pay attention to, especially because that 60-minute time frame chart, if there's a close above that 96.28, because that would be your next real resistance level at 96.51. With no new profiles for the YM, the Dow, or the Russell 2000 RTY out here. So nothing trading below bottom of the boxes out here, just suggesting that right now all we just have is just your normal back and fill, just a little sideways upper end consolidation. It would almost appear that if there was going to be a bust out to the downside, it would come first from the ES Mini. It looks like that is closer to the bottom of the box than the NQ is by far. So, you can keep your eye on the ES Mini, and that level to be watching would be 33.39. Remember that there is always the chance that this profile will change. It already has done that once today. And so it could do it again. But we go with the information that is present, and this is the information that is present. So no changes in trend or anything along those lines. I have a request out here. Let's go to that request. This is from Chaz in Cocoa Beach. Chaz, did you watch that race last night? I didn't see the end. I saw a replay at the end, but what was watching a little bit late yesterday afternoon. Man, what that last lap. That's a doozy out there. In any event, let's go take a look at Peritoneum. I don't even know how you spell this. I mean, I know how you spell it. I don't know how you pronounce it. Peritum. No idea. But what's the question out here? The question is, what about TEUM? Yeah, okay, but what about it? Well, let's go take a look, see if we can figure out what it's doing. First, right now, it's got a bearish structured profile out here, Chaz, that says bullish would be closing above 80 cents, the top of that box. But 80 cents is where the sellers are at. Now, this is traded in between where the sellers are and sellers and buyers. The center of the box is where you have both sellers and buyers. So any close below 75, not 74, not 73, I don't know, say 70 cents. If this were to close at about 70 cents, 71 cents out there, what it would be suggesting to you, Chaz, that price would pull back, or sellers should have the ability to push price down to the bottom of that profile, 62 cents. Not a guarantee, but it is a pretty good guarantee. The top of the weekly is at 70, so you'd have to watch that area too out there. So that's what I see when I take a look at ticker symbol TEUM. Now let's look at my other charts out here, see if there's any other signals inside of this equity. Well, you will know that if price is able to take out the 80 cent area and you were long, that you would see resistance or should see resistance at 89 cents. Why 89? That is where the TD9 count breakdown level. In this bottom last time, Chaz, it was on bar number 8 of a TD9 9 count out there. And so if you had taken a long trade right around 55 cents or so on that, you would have known that your target exit is 89 cents. It still is the target exit if price can clear the top of that profile. The weekly time frame chart out here doesn't give us really anything. It did form a wave number 7. That's letter G back in October 25th out there. So there's a nice intermediate term-ish type bottom out here. But right now it's the daily I would think that you're focused on. Yeah, the daily that you're focused on. So I hope that helps you out, Chaz, from Cocoa Beach out there. With regard to ticker symbol TEUM. Thanks for writing in and asking about that. So back to the markets. What else? So the spot volatility index. So the spot volatility index is trading above its 50-day exponential moving average. So that's always what I will use it for is it tells us that there's this kind of a lack of liquidity. If markets are going to crack, move to the downside, it's always because there's no buyers, a lack of liquidity, so to speak. And we use that 50-day exponential moving average inside the spot volatility to give us that gauge. If price is below that, at which right now is 1437, then there's plenty of liquidity. And for those of you that are technicians, or you're learning to become a technician out there, what I'll do is I'll just simply, I help you get rid of the fallacies that are out there. So for example, one of the fallacies out there is that the spot volatility index, if it's low, there's no fear in the marketplace. Try to trade that one as a strategy. Or it's between certain levels. That's all BS. Go back and take a look at the 2007 to 2009 time frame. Go take a look at that 2009 bottom. Put the 50-day exponential moving average on there, and you're going to see that as soon as the spot volatility index was trading below that, and we're talking in the 40s. If I shared with you right now that the spot volatility index was in the 40s, number one, you would think we've had some kind of market crash or what have you, but it's in relationship to that 50-day exponential moving average. When you go back there, it'll open up your eyes as to why Stevie uses this as one of the tools and why you should also use this as one of the tools. It's about the simplest thing that is out there. Now, it's not going to typically identify the top or the bottom. I say typically because here, I'll put this chart up here. Give me a minute to do this because, we'll have to do it when we get back from the break out there. And that is the TD9 count top that formed in the spot volatility index. And for those, we do pay attention. They've worked great for the last 3 years. We'll be right back.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the tax opportunity zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So I mentioned the spot volatility index before we went to that last breakout here. And what you'll notice on this chart, you'll notice that bar number 9 identified the top out there. So remember, I've said that you can't use the spot volatility index necessarily to help time the top or the bottom. It's a great tool. Let me turn that sound off on my other computers out there. Sorry about that. And here's a chart, and I mentioned that it's been working really well for the last several years out here. This is just a bar chart. So you can see the TD9 count top inside the spot volatility index, recent one we had. If we go back further, there was another TD9 count top that took place back in March of 2018. That identified the top. There was a TD9 count top that happened on February 6th of 2018. We can come back here into 2017, a TD9 count top. In 2016, in November of 2016, a TD9 count top. So it's been working really well for the last 3.5, 4 years out here. And so I'm going to just delete that now. And what we can see is that so far today's move to the upside inside the spot volatility index, it's trading below what? Resistance, Stevie's green line out here, 1512. So here's how I would take a look at today's action. If you see the spot volatility index close above 1512, well, then it's above both the 50-day exponential moving average, which you can't see here, but it's it then creates this rising price oscillator above zero scenario, suggesting that we should see price move higher. I'm sorry, the spot volatility index move higher, and therefore the S&P should move lower. So I would watch 1512. Now that number could change by a penny or two during the day out here, but so far the actual move higher, and as we speak at 1:44 in the afternoon, we've seen a rejection inside the spot volatility index of a key level of resistance. Now, if we go then and take a look at the ES mini, just to take the flow that we've got out here, or my flow, or whatever flow that is. Let's stay with the hourly time frame charts out here. What do we know about the hourly time frame chart? That we just recently had a confirmed Rhodes momentum indicator bottom. That was with the piercing candle. Price moving lower to a less relative energy out here. And price is trading with inside its profile. So we don't have a breakout. Resistance was 33.72. It still is. 33.72 and 3 ticks out there. But it does have a bullish bottom signal on the hourly time frame chart. So if you put that together with the spot volatility index coming in at 4 o'clock out here, if it's below Stevie's green line, the spot volatility that is, says be cautious to the short side out there. That's the message. That's how I would review the message out here. Now, I've got both a question and a den to look at natural gas, and I've got another question that has also come in from Michael H. Let me see. And Michael says, Well, Michael and Tucker both asking for the same thing. Can we take a look at natural gas? And Michael wants to also look at gold out there. So I did not review those in the first 10 minutes. So you guys are both going to get a look there. So in the case of gold, interesting out here. If we take a look at the price movement is moving higher, doing less relative energy out there. It had already done that before to create a nice top. It did create that little dark cloud cover, nice top. All price was able to do is push down to test support, which was its breakout level of 1551.70. Now, in the case of gold, it only becomes a problem if we see some type of bearish reversal candle. So today, tomorrow out here, but otherwise price is gunning for the high right here that created that wave number 7 count out here. And that's from the trading day of January the 8th, I believe. But you had a bearish engulfing candle. So that says resistance 1619 out here, and you're trading at 1604. So that suggests the 1619 area is in play. Let's go take a look at gold. Take a look at this set of charts, which will give us the weekly time frame. And the weekly time frame shows that price is above the top of its weekly profile. That's 1593. That's the left-hand panel of the chart that you're looking at. By the way, gold expressed in euros and yen, new all-time highs out here. Not too far away in terms of Great British pounds. 12. We're 12. It's at 1233. It's got to get to about 1300, 1298 to make a new all-time high. But I would say, Michael, that looks like gold wants to continue to move higher at this stage here and probably test that high from January the 8th out there. So I hope that helps you out with regard to Goldilocks. With regard to natural gas out here, let's pull over the April contract out here. And this suggests that it wants to move higher. This chart's not going to help me identify where it wants to head to. So instead, let's switch charts. Let's go take a look at market profiles, because that's really should become the focus out here. So let's go take a look at daily and weekly profile levels out here for natural gas. Give me a moment to do that, if you would. NGJ20 out here. And let's pay attention to the right-hand panels out here, Tucker. Let's pay attention to the right-hand panel, Michael, as well. So here's what you know. We know that price is above resistance on a daily time frame. Let's actually expand out the daily time frame and see if that has any kind of meaning out here. We haven't seen it close above the top of a daily profile inside of natural gas. Well, it looks like the last time might have been October 29th. 2019. And so if there's a close today, guys, above 1.939, that is suggesting higher price. Now, higher price to where? Well, I would say the next higher price range would be the top of that weekly profile, and that's at 1.992. To both of you guys and everybody else out there, I would say if you get a close above that 1.992, then that's telling you about a change in trend, which would really kind of line up with a seasonal pattern that I think last week Mr. Bill inside the Tiger's Den provided us with that. But right now you've got a breakout above resistance. There's no reason to suggest that price won't continue to move higher, because the next highest profile is on the weekly, and that's at 1.992. So Michael H. and Tucker, I hope that helps you out with regard to natural gas out there. No other requests that I see. So we've got about a minute before we go to the break. Is there anything else of importance here to share with you? I think not. Not that I see, at least at this stage of the game. So maybe you can watch this here real quickly. I'll just put this out here. This is an intraday thing. This is an intraday thing. Many people have heard of the opening range. Now, a lot of people will take a look at the opening range, and they're basically just trading the first half hour of trading. And they're really taking a look at the cash marketplace out here. If you are a futures trader, I would suggest not using the cash open as your opening range, but instead using the open of the contract as your opening range. That's what these lines on this chart are showing us. These lines that go from left to right and show you the entire day out here. And, they really can help you to understand support and resistance. So in this case here, we knew it was a gap down, so it makes last night's a little bit easier. But you can also see, just simply from an opening range standpoint, where price continues to find resistance, again, a 30-minute time frame chart. And so if you did see a close above that gap, much like we were talking about first segment out there, it is really telling you about price wanting to overcome an area of resistance and wanting to trade higher. We don't have that signal just yet, not at 150 in the afternoon. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So we do have a question that came in. I believe this might have been from Friday as well out here. And the question is, would you buy F ticker symbol FENY? There's 2, IXC and FENY. So in order to do that, if we're going bottom fishing, we want to see some kind of bottoming pattern. This is Fidelity and MSCI Energy Index out here. And so FENY is the ticker symbol. Let's go ahead and punch up the charts, take a look at the daily time frame out here. And so would you buy it right now? If you wanted to go long energy, then this is a potential buy point at 14.19, which is a test of Stevie's red line out here. We're just looking at the daily time frame. Let me go ahead and pull up IXC because we only have about a minute here left, and I'm going to pull that up. And then the last thing we'll do is just punch up the chart for light sweet crude. Now, in the case of IXC, this formed a nice TD9 count bottom, a wave number 7 bottom out here. And if you're going to buy it, the buy zone is between $27.77 and $28 even, Steven. That's the center and bottom of its bullish structure daily profile. I'll assume that this is also an energy stock. So I like this one better just simply because of the bottoms out here. Oh, I mentioned light sweet crude. We need to go take a look at that. And this is not going to go anywhere. This trade will not really go anywhere. And I'm speaking from personal experience here because I am trying to be long the energy sector. And you can see that what light sweet crude did, formed a nice TD9 count bottom out here. But it's just simply struggling. And what's odd also is that we've seen really a move higher inside of light sweet crude. And the equities and even the ETF should be also moving higher. But it hasn't been. So, JT, there's some unusual activity out here in the light sweet crude space. The recommendation that I gave to subscribers on Friday afternoon, because we were at basically break even on the energy trade, was that they could consider taking that capital and putting it being long natural gas. So, JT, those are Stevie's thoughts as we speak. Hey, stay tuned. 2 great hours. David White is up next, and Tom O'Brien. I'll be back with you on Wonderful Wednesday. Have a great Tuesday, folks.
Since 1984,